Good morning, everyone. I'm Martha Stokes. I'm a chartered market technician. I'm a buy-side professional, and I've been retired, and I enjoy teaching you all. And it's really great because I'm getting some nice thank yous, and I appreciate you writing me. I'm a very busy person, so it's often difficult for me to respond personally, but I will answer questions either next week or sometimes I have time to do so. What we're looking at today is how how are corporations coping with the volatility that's going on with all the things that are going on in the Mideast and so on and so forth? We look at the buy side looks at things from the market, the stock market, and how to protect the fiduciary responsibilities to the wealth of the middle class of America, which is the largest in the world. And they have a vast amount of assets under management on behalf of all the 401k holders, IRAs, and so on in the US and in Europe and other countries. They're growing and expanding into other countries to provide this support service to anyone who has a long-term investment pension plan anywhere in the world. And they are called buy-side institutions. There are also derivative developers such as State Street, and BlackRock, who are now global asset management corporations, mainly catering to wealthy individuals. They are not the same as the buy-side institutions. They are different, but they behave similarly in what they are doing. The buy-side institutions create mutual funds, ETFs, and other things because now they completely control everything that they provide to the pension plans that they take care of. Everything is done in-house. It used to be that they gave that when they were young and small because pension plans haven't always been in the market. It was the late 70s when they were finally permitted by the Congress to be in the market as such. So it moved away from the banks having some pension plans for people to the mutual fund industry being developed, and it developed at that time. And as the market grows, then it becomes bigger and bigger and bigger because we have more and more people with pension plans that need to be managed for them. And they offer these packages of instruments or products within the pension plan. And everybody has there's 25 of these giant institutions and pension funds that provide this service and about 100 mid-sized ones. BlackRock and State Street are different because they started out as derivatives developers selling ETFs and so on and so forth, and have grown into these huge asset management corporations that mainly cater to small funds managers and to large pools of very wealthy people. So they have this fiduciary responsibility that they must maintain. And so they are in the best interest for themselves, because that's how they make money, is managing these pension funds, but also in doing so, they also try to protect you. So right now, I can tell you that the buy-side institutions are not very happy, and they make statements silently. They don't go around bragging or telling, or you'll never see their commentary anywhere. They don't do that. They're long-term investors and they have a fiduciary responsibility, but they do speak loudly with silence. And usually they would be coming in and they would be doing support the market, which they agreed to way back in 2017, 2018, 2019, when they saw that so many people, new pension fund holders, younger generation, were buying ETFs rather than mutual funds. And they said, we have a problem. In a few years, we're going to have some sort of market panic, and all these ETFs can be sold just like that, just like a stock, boom, 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 really fast. So we need to support the market. And they all came to an agreement in those days, the buy-side institutions, how they were going to do that. Today, we're going to talk about how corporations are keeping the market up, because the buy side are waiting to see what's going to happen. And they're speaking their disapproval by not supporting the market, because the sell side institution knows that they support the market, and the sell side is trying to sell short and then buy to cover to make a whole lot of money. And so they're nervous when they get around support levels, and like yesterday, they they started out with a massive selling of futures. The sell-side institutions were going to sell S&P 500 futures like crazy, mini E-minis and so on and so forth. And suddenly they got the retail news that something had shifted, and they were madly, before the market opened, seconds before the market, canceling all those orders and doing a whole lot of buying so they could sell into the buying frenzy that did not quite appear, but it did push the gap. HFTs gapped and ran the market up, the indexes up, and then they sold down to some extent for the rest of the day. We're battling the 10% level. That 10% level is crucial. It's an approximation, but it's supposed to be the previous all-time high on the indexes. And then it drops to 10%. So that's where the sell-side institutions believed that the buy-side institutions, who don't tell anybody what they're doing, were sitting and waiting, but that was not the case. So stocks dipped down slightly lower than the 10%. So did the indexes. Mainly the indexes dipped down below that 10%. And that caused a lot of activities that were not buy-side yet. So I wanted you to understand this, and I know it's complicated and hard, and I'm trying very hard. So if you have questions, please put them in, and I'll answer next week. If you look at this chart, there's definitely support, some sort of support for this stock. It's a big name company called Apple, and it has support, but it's not buy-side institutions doing it. Apple has approximately 64.60 buy-side institutions, percentage of shares held by institutions, and that's low. So they're not really supporting it. Would if they supported it within the indexes, because it's a big name company. But something is going on here, and something is supporting this stock. Okay, so we're looking at this and we're going, wow, what the heck? It's not the buy-side institutions. The volume isn't right. The pattern here is going up and down, wavering. And so we have this action that's going on that we can't figure out. Well, guess what? 60% of the S&P 500 are doing buybacks right now, and Apple has the largest of ever, $100 billion that they can use for corporate buybacks. So you see this stock and it starts to go down. You think, oh, maybe I should sell it short. Maybe I can make some money on this. It's not that pricey. It's a little, it may be above some people's budgets, but you're thinking, oh, here's a little candle. Maybe I'll sell short. And then all of a sudden it reverses on you. Corporate buybacks can whipsaw your sell shorts. The sell side institutions, the big money center banks, are managing the buybacks because the corporations do not have anybody that is a specialist in short-term trading activity, which is what buybacks are. They're buying back their shares of stock, lowering the outstanding shares, and so on and so forth. And it's going to boost the dividends and so on for those who have it long term. So the bank of record does the buybacks always. So they're buying into this to keep this stock. And what Apple has said, Tim Cook, the CEO, and the board of directors has said, we want to hold this line. We want to hold this line. So you automate your system of buybacks. When it dips into this line, you hold this line. And hundreds of corporations are holding the line. This isn't small lot investors. This isn't small asset managers. This isn't retail traders. These are corporations holding that line at 10% or higher. Apple made the decision to hold it at this line because this is where its fundamentals are. Okay? This is where its fundamentals are right now. And they are going to hold the line unless there is this massive, massive selling that the buybacks cannot handle. So far, the activity has been below average as far as the panic selling going and so on and so forth most days. So when you look at a stock chart, remember what Martha has told you. You need to look at this and say, who is controlling price and how long and how powerful? Apple has all the money in the world to support this line, and it will, because it is concerned about maintaining its market capitalization, which is important for its future and where it sets as far as its importance in the market. And Apple is a very important stock, so are many others. But this is a buyback, and they're holding the line. So that's my topic for the day. I hope you enjoyed it and understand it. And I hope you have a great trading week. Trade wisely, not speculatively. I'm Martha Stokes, and that's the topic for today.